Americans for Fair Taxation presents the weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, October 6, 2023. It's time to end the Dirty Dozen. Each year, the IRS publishes what they believe are the dozen biggest tax evasion schemes, the Dirty Dozen. The list of schemes changes from year to year, but it will continue to exist for as long as there's an income payroll tax system. Now, maybe some of the people employing these schemes are indeed really criminals, but most of the taxpayers using these schemes today are protesting against the present income payroll tax system and want to lower their federal income tax liability. Here is the 2023 Dirty Dozen. 1. Employee retention credit claims. Many groups are advertising that companies can get a credit for retaining their employees during the COVID pandemic and often instruct these companies to file false and incorrect claims that, even if paid, will be overturned when reviewed by the IRS. The company will then be subject to penalties and interest even though they follow the advice of the promoters. The IRS has suspended that program for now. Additionally, some of these advertisements are from scammers looking to collect the taxpayer's personally identifiable information in exchange for these false promises. The scammers then use the information to commit identity theft. Number 2, phishing and smishing. Fake communications from those posing as legitimate organizations in the tax and financial community, including the IRS and the states, arrive in the form of an unsolicited text message, smishing, or email, phishing. The idea is to lure unsuspecting victims to provide valuable personal and financial information that, again, can lead to identity theft. Now, the IRS initiates most contacts through regular mail and will never initiate contact with a taxpayer by email, text, or social media message regarding a bill or a tax refund. Number 3. Online account help from third-party scammers. Swindlers pose as helpful third parties and offer to help create a taxpayer's IRS online account at irs.gov that provides taxpayers with valuable tax information. The intent, again, is to steal a taxpayer's personal information. Number 4, false fuel tax credit claims. The fuel tax credit is meant for off-highway businesses and farming use, and as such, it's not available to most taxpayers. Unscrupulous tax return preparers and promoters are enticing taxpayers to inflate their refunds by erroneously claiming this credit. Number 5, fake charities. Scammers set up these fake organizations to take advantage of people's generosity. They seek money and personal information which can be used to further exploit victims through identity theft. Taxpayers who give money or goods to a charity might be able to claim a deduction on their federal tax return if they itemize deductions, but charitable donations only count if they go to a qualified tax-exempt organization recognized by the IRS. Number 6, unscrupulous tax return preparers. People should watch for common warning signs, including charging a fee based on the size of the refund. A major red flag is when the tax preparer is unwilling to sign on the dotted line as required by law and has the individual sign the return as if they had prepared it without help. Number 7, social media, fraudulent form filing, and bad advice. Social media often circulates inaccurate or misleading tax information. Number 8, spear phishing and cybersecurity for tax professionals. Now, phishing is a term given to emails or text messages designed to get users to provide personal information. Spear phishing is a tailored phishing attempt at a specific organization or business. A successful spear phishing attack can ultimately steal client data and the tax preparer's identity, thereby allowing the thief to file fraudulent returns and get refunds. Number 9, offer in compromise companies. Offers in compromise help people who can't pay to settle their federal tax debts. But some companies promote offers in compromise to people who clearly don't meet the qualifications, frequently costing taxpayers thousands of dollars in fees, and they don't get their IRS settlement. Number 10, schemes aimed at high-income filers. This includes the Charitable Remainder Annuity Trust. Charitable remainder trusts are irrevocable trusts that let individuals donate assets to charity and draw annual income for life or a specific period. Promoters promise benefits that don't exist and can result in large penalties to the taxpayer. Also, there are monetized installment sales. Since today, income is only taxed when it's received from the sale of an asset, some promoters offer to pay the seller the full amount owed in the installment sale, but claim it does not trigger income. This can lead to penalties and interest. Number 11, bogus tax avoidance strategies. Syndicated conservation easements. A conservation easement is a restriction on the use of real property. Generally, taxpayers may claim a charitable contribution deduction for the fair market value of a conservation easement transferred to a charity if the transfer meets the requirements of the Internal Revenue Code Section 170. Now, some abusive arrangements, which generate high fees for promoters, overvalue the easement and grossly inflate tax deduction for the taxpayer, resulting in disallowance of the deduction and penalties and interest charged to the taxpayer. And number 12, schemes with international elements. Offshore accounts and digital assets. The IRS continues to identify individuals who attempt to conceal income in offshore banks, brokerage accounts, digital asset account, and nominee entities. Asset protection professionals and unscrupulous promoters continue to lure U.S. persons into placing their assets in offshore accounts and structures, saying they're out of reach of the IRS. These assertions are not true. The IRS can identify and track anonymous transactions of foreign financial accounts as well as digital assets. And then there's Maltese individual retirement arrangements misusing treaty. U.S. citizens or residents contribute to foreign individual retirement accounts in Malta or potentially in other host countries, and the U.S. taxpayer improperly claims an exemption from U.S. income tax on gains and earnings and in distributions from the foreign individual retirement plan. In conclusion, the Internal Revenue Code is extremely complicated and also quite unclear. This is why there's an opportunity for many of the tax schemes described above to attract investors. They generally appear to be in compliance with the tax code, and even many legitimate tax advisors don't see anything wrong. If the scheme is improper but not audited, then there's a benefit to the taxpayer. In fact, many of these schemes have been promoted as never having been contested by the IRS. But too often, this just means that they were not audited or audited by an unsophisticated IRS auditor. The only real loser in all this is the taxpayer, who may find out a few years later that not only do they owe the income tax they supposedly saved, but they also owe penalties and interest that can equal the amount of tax. Now, these schemes provide work for the IRS, the bureaucrats and tax professionals. None of these people ask the obvious question: why do we have an income tax system that is so prone to being abused? Why do we have an income tax system that is impossible to understand, even by tax professionals? When the FAIRtax is passed, there's no longer a federal income payroll tax, and there will be no IRS. Just think of how easy that will make our lives. Now, sure, there will be criminals who will try to find a way to improperly avoid paying the FAIRtax, just like there are always going to be criminals who can't or won't work and must steal from others. Now, here's the difference. Today, many taxpayers that invest in tax shelters have some basis for the decision because of the complexity and lack of specific rules in the tax code. The FAIRtax is very simple. If you make a retail purchase of a new product or retail service, it's taxable. Now, since less than 10% of the nation's retailers account for 90% of the retail purchases, there is little chance for evasion for most taxpayers. These large retailers are not going to risk getting caught doing anything illegal. Now, today, if you pay cash to a repairman, it's the repairman's obligation to report the income. Under the FAIRtax, the repairman that's providing a retail service will be required to collect the FAIRtax. If he fails to collect the FAIRtax from the customer, that transaction violates the law. Simple and easy. But in that case, it's the repairman who failed to collect the FAIRtax that's in trouble, not the customer who didn't pay the tax. When we pass the fair tax, there will no longer be an IRS that audits and extorts taxpayers. Now, there will be some people in D.C. who will be needed to monitor the fair tax collections from the states. However, the IRS, 260 million tax returns, and countless wasted American taxpayer hours spent trying to comply will all be gone. Now, the only reason to have a complex income payroll tax system is to give jobs to bureaucrats and give D.C. control over how much of our incomes we get to keep, and also to provide politicians with an ATM machine to finance their campaigns. Now, why would D.C. pass the fair tax and give up this almost unlimited source of donations? Well, they won't, at least not voluntarily. The only way will be as if the rest of us demand it. Now, Congress and D.C. know there's a better alternative to the present system, the fair tax. So instead of spending time and money doing endless hours of paperwork that don't create anything of value for yourself, your family, or the nation, why not eliminate the unnecessary waste? The fair tax transfers power from the government and bureaucrats to the people. We, not the bureaucrats in D.C., will decide how much tax we pay. Isn't it time to end this ludicrous tax collection system and the IRS along with it? When the fair tax is enacted, there will be no need to fear being audited by the IRS or raided by armed IRS agents because there will be no more IRS. Now, there's going to be a vote on the fair tax in the House of Representatives. Speaker McCarthy and the other elites didn't want it, but it was forced on them. So, we now have the opportunity to force all members of the House to show where they stand. They can vote for the present income payroll tax system, or they can vote for the fair tax. They can support the corrupt income tax in the IRS, or they can vote to eliminate it. It can't be any simpler than that. They can hide the true cost of their government, or they can pass the fair tax and show everyone the true cost of government on every retail receipt. And finally, they can support the largest transfer of power from the government to the people, the fair tax, or they can vote against it. Now, if members think the fair tax needs to be changed, they can propose that change. Don't let them get away with rejecting the entire bill because it has a flaw that can be easily addressed. Please stand with us and demand that your representatives support a much fairer, much simpler, and much more efficient way to fund the government, the fair tax. The fair tax doesn't pick winners and losers. Because it taxes spending, not earnings, the fair tax lets everyone save for their retirement tax-free. The fair tax will allow us to take back control. The income payroll tax system is broken. It's no longer working. We can't repair it, but we can replace it with the fair tax. Join us and take back control of our country and our lives, not with bullets, but with the elimination of one of the biggest threats to our liberty and economic prosperity, the income payroll tax. We should all remember Edmund Burke's warning that applies to our efforts to take back control. Nobody made a greater mistake than he who did nothing because he could only do a little. We should also remember this quote from George Orwell's 1984, which, if we do nothing, may foretell your and your children's future. If you want to picture the future, imagine a boot stamping on a human face forever. So what can each of us do? We can write letters and make calls to our elected representatives and attend Zoom town hall meetings demanding that if they really want to allow Americans to take back control, the first step is to eliminate the income payroll tax system and enact the fair tax. Take back control. Help us pass the fair tax. Help us bring about real tax reform and stop future IRS abuses. By contributing or investing $10.40 a month, you help provide a financial base to Americans for fair taxation. Now, if you can make larger contributions/investments, these will be used not for salaries, as we're all volunteers, but for the needed updates to our economic studies, which will be vital for all future years. Please go to FAIRtax.org and invest in AFFT. It's an investment in your and your family's future.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at FAIRtax.org.